All right, well, let's go ahead and get started today. Thanks for coming and joining us this weekend, this Saturday. This is the third and final event of our three-event series. This by no means that we have covered every single thing that can be covered. We will have more of these. We have, for those of you that are trying to figure out if this is something that you want to do, if this type of trading is for you, we have just an awful lot. Last I saw, we have probably 120 or more trade of the day videos on YouTube. Uh, to be honest, those are probably the best learning tool for somebody who wants to know and understand what we're doing. Certainly there are webinars on YouTube that we do to try to explain it. We have events like this that we do. But if you sit and watch our trade of the day videos, one after the other, you'll begin to see and understand the pattern that we're watching. You'll understand very clearly what we do, how we do it. You hear us moderating the trades in the trade room before the trade sets up, after we enter a trade, how we manage the trade, when we exit the trade, how we did in the trade. And that's really an excellent learning tool right there as it relates to understanding if this is the type of trading that you think you would be interested in. Okay, so here's what we're going to do today. We're going to, that says approximately 60 minutes plus. It's definitely going to go over 60 minutes today. We're going to take more questions today. We're going to go over we're going to have a quiz for those of you that haven't been with us on the first two events this week. We are going to quiz you on what we go over today. And we're going to actually go over the quiz today after we're done and go over the correct answers. Okay? And then we're going to do a very quick sneak peek at our new accountability program. We used to have a mentoring program we called the Trader RX. That program was a true mentoring program by one of us here at the Intentional Trader that have, pretty much mastered the trade setups and the trade management and all of that. So we would mentor new people that were coming into the program. And when I say mentor, this isn't a phone call once a week like a lot of companies. They say they have a mentoring program and they give you a 1 hour phone call once a week. That's not a real mentor. What we would do is actually analyze every single trade that you would take. We would give you recommendations. We'd give you either a pat on the back or a kick in the knee to tell you that you did it right or wrong, and make suggestions, all along the way. We would do that, and you would have goals to hit, and if you hit a goal, then you got to move to the next level. So we're not doing that level of mentoring now, but what we are going to be doing is teaming you guys up so you can help each other to be accountable for the decisions that you make. We're still going to have different goals for different levels. We will be switching you up with different partners from time to time. So it's a really, really interesting program, and we hope that you guys are going to get a lot out of it. Our people that are in our Einstein program that invested in the full boat, they're all in. They get this program for free. It comes with the Einstein program, so it's just another way that we've increased the value of the Einstein program. Anybody that chooses to get involved and they have a lesser package than the Einstein, will certainly make it available to them, but there will be a cost involved for that. All right, and we'll talk about that more towards the end. All right, so we're going to go over quickly, the basics of why we do what we do. We already covered this on day 1 and day 2, but we have people with us that couldn't be here during the week, and they're here during the weekend. And it's important to understand that everything builds on each other. Okay, so and it repeats. So we're going to go ahead and talk about again this what we're doing here. Now this looks like you can pull up any chart and you can see patterns like this. There are very specific patterns on this chart that we've identified as good areas where we have an edge for our trading. And the funny thing is it's in front of us every day on every chart, time-based or tick-based chart, but we tend to not look at it because we've been conditioned to believe that we've got to trade from down here to, you know, up here somewhere, and that if we're, you know, in a range like this, this whole thing is somewhat in a range, that we don't really want to be involved in that. So you just sit and wait a lot, or worse than that, you actually try to force trades. So I failed miserably at trying to buy down here and sell up here. That didn't work for me. All right, my emotion management failed at trying to know when to, you know, should I exit here? Should I have exited down here? Should I stay with it? Should, you know, I never could do that. But I did find an edge. Okay, so we're going to look more closely at that edge. I noticed that when price was channeling or in a range, this could be an area of low interest. This could be an area of accumulation or distribution where the big boys are buying up or selling a lot, but trying to do it on very low volume so people don't figure out what's going on. So I noticed that we have these ranges, and then we suddenly will have these breakouts. Now, a lot of people want to trade these breakouts, and that's very important to understand what's going on during these breakouts. I kept seeing this, and I kind of had an aha, and I started thinking, you know, there's something here. There's something exploitable here. So we're looking at these breakouts, and the breakouts people start, you know, getting really excited, and the buyers, they see this breakout, they want to get in on this. And maybe you guys trade breakouts and you've gotten into some of these. Well, there are these traders called momentum traders, and they want to actually excuse me, bid this up to a point where they can actually start, that triggers them to start buying. Now, there's an awful lot that goes into this, and we're not going to cover all of that. But what I can tell you is it triggers them to start buying in here. After they've identified the breakout, they've been triggered to start buying, and they're going to buy up until this point where they're going to suddenly stop buying and start selling, okay? Which causes, because they've bought up so much here, and then they start dumping it here, they're hoping they're dumping it, they're dumping it before all the other buyers are gone, okay? So they want to get in and get out, and they want to dump it before all the other buyers are exhausted here. All the other buyers start jumping in. Well, there's this exhaustion after they dump all these contracts back on, and that what causes the price to drop. All right, so there's a lot going on here, and it happens over and over and over again. All right, remember, I'm going through this really quickly because we've already covered this in the other two sessions. So if you have any questions about this, feel free to ask questions after we're done. Okay, we are going to have a question and answer session at the end of our session today. We will be doing questions and answers for as long as you've got them. Okay. All right. So we have a trade set up called a Rockstar trade. All right. And what we're looking for is price breaking out of a range. We have a breakout bar that is larger than previous bars. Okay. So you'll notice that this breakout, I'm on the wrong thing. This breakout bar is bigger than these other bars. Momentum increases, right? So we see this momentum changing. So we notice these bars changing from black to a lighter color. That's our momentum indicator. So we're looking for a strong push, Okay, that's the way I characterize it a lot of times in the trade room. I'll say, oh, we have a strong push. What I'm saying is we have an increase in momentum. Now, why do we want an increase in momentum? We want to see that because exhaustion always sets in after a strong push or a strong momentum. Momentum will not ever be sustained in markets, all right? Which is another reason why we like to use very fast charts. 1 minute trading charts is what we use. And we're looking for momentum so that we can anticipate exhaustion. The stronger the momentum, the more imminent the exhaustion. Then we're looking for price to become overbought. When it becomes overbought, that means that it's very likely that there are many buyers left up in this area, okay? Because we know, everybody knows, that price never pushes in one direction indefinitely. It's always going to pull back, consolidate, and then continue on. All right? So we're looking for, when this happens, this high momentum. Now we can have increased momentum, but it really has a lot of value to us when we get this speed tick. Now the speed tick tells us that orders are being processed faster than is typical for retail traders. Pay attention to this. Remember this. This is going to come up again in a few minutes when we start covering a different trade setup. All right? So then we have this price action, and we're reading price action inside of every single bar. Okay? When I say price action, what I mean is we're reading volume, and we're reading certain types of volume. And when we get a type of volume that we call churning, meaning that there's a lot of buying and selling at a certain area of the bar, a certain range, you'll see and you'll notice our buyers have suddenly run into a group of sellers that believe that this is a good place to be selling, okay? So we'll get a churning action. So when I say that we're reading price action, we're actually reading volume. And we're only going to report with this dot the type of volume that is important for making a trade decision, okay? We're not going to just tell you what the volume is. Everybody looks at volume, right? Most people believe that I'm not watching volume and that they can't understand how I could trade without having my finger on the pulse of volume. And I understand that seems to be very important to a lot of people. Guess who also thinks that everybody watches volume? The market makers, right? They know that people believe that volume is very important, so they're going to do everything they can to trade without tipping their hands, right? They don't want to show huge amounts of volume so that you can figure out what they're doing, all right? But I'm going to figure out, I don't want to know when there's huge amounts. I want to know when there's a particular type of volume, okay? Then we're looking for divergence. When all of these conditions exist, the breakout, the strong momentum, the rate at which orders are being processed is faster than what we believe retails can do it. The price action. Then suddenly when we have all of this information to suggest that price is getting exhausted, the next thing to look for is to see if momentum has changed directions, right? Price and momentum will generally run in the same direction, right? But when price and momentum diverge, what usually happens is momentum will change directions before price does. This is an incredibly powerful indicator on what's likely to happen next because price almost always follows momentum, okay? Momentum will lead and price will follow. So we'll print this rock star up here when this bar has diverged from the momentum indicators that we use to create the rock star, okay? So our Rockstar has inside of it the speed tick, the OBOS indicator, and several divergence indicators. Okay, and that's going to create our Rockstar. The trade would be short at the open of this bar. Okay. So, basic Rockstar setup. We're looking for a breakout, right? So we're breaking out of a channel or a range. Then we're looking for a strong push, okay, or some momentum. If neither of those exist, there's no point in looking for other indicators, okay? These are the first qualifiers right here, and if this isn't happening, forget about it. There's no trade. Just wait. Just keep waiting. If it is happening, keep paying attention. Doesn't mean we have a setup, but it's time to start paying attention. All right. Now we're looking for our momentum bars. Okay. This is our breakout, and the bars start showing some strong momentum. In the trade room, we have these colored so that the start of the momentum is black, and the longer the momentum goes on, the lighter the colors get. Why? Because it's a very quick visual reference to let you know that how imminent we expect the exhaustion to be. The lighter the bars, the more imminent the exhaustion, because, like I said, the momentum cannot be sustained. It will never be. It will always exhaust. As long as there are buyers and sellers in the market, that's going to happen. All right? So we're going to watch for those colors. Some optional criteria here at this stage, okay? At this stage of our qualifying for the Rockstar trade setup, we're looking for the potential that it's getting overbought, okay? That's not absolutely required, but it's an optional criteria for those that want to be just a bit more conservative, okay? You maybe don't want to trade on the first bar of a breakout. So let's say that we get on the open of this bar a Rockstar, where we say, well, this is the first bar of the breakout. That doesn't qualify for me. For some people it will, for some it won't. So that's just some optional criteria. Now, if price does break out of this range and it's just a bunch of small bars, just say, all right, I don't trade those, because the bars have to be substantially larger than the bars in the channel. Okay? So if we're still a go and we're still watching, we're still interested in a potential trade setup, next thing we're going to look for is price to continue to drive upwards and slam into one of our lines of major resistance. Now, a line of major resistance is resistance that doesn't change over the course of the trading day. Okay? These are lines of support or resistance that we have determined based on yesterday's trading. All right? So this is where we expect that retail traders are going to be either looking for major areas of resistance, major areas of support, and probably don't want to trade into them. All right? So we expect some sort of reaction to this line most of the time. All right? Not always, but most of the time. So we're going to use that, and we want to see this strong push. Then we want to see this speed tick. Remember, this is where we feel like that the orders that are being processed through the market are being processed much faster than the current batch of retail traders could actually do it. Retail traders are you and me, the little guys. All right? We can't process orders the way the big boys can. And obviously, we don't have the supercomputers inside of the exchanges or next door. So we can only process orders as fast as we can, which is what we're seeing down in here. When the big boys step in, the orders start, and then maybe they don't do it with high volume, but they will do it very, very quickly so that they can create this big move here. That is a purposeful manipulation. It's not happenstance. All right? Now, other optional criteria. Let's say you don't trade on only black momentum bars. If all of these stayed black, You could create a criteria that says, nope, I'm going to wait until I at least have a gray momentum bar. That's totally up to you and your level of risk tolerance. Medium or big blue speed tick threshold. This is a white speed tick, and this suggests that the orders have increased to a point where we're pretty sure that this bar is being manipulated by an HFT or a quant or an algo of some sort, the hedge funds, the banks, whatever. We do have other threshold levels that suggest maybe it's more than one, and maybe they're fighting with each other. And then we have a much bigger blue one that's a big warning flag for us that says don't trade. And we'll talk about that more when we get to the speed tick trade setup, okay? So we've got all of these conditions, and we're going to, if this bar opens, the next bar, after we have all these conditions in place, we've qualified this setup, but we haven't traded yet. We're still waiting. And that waiting period is confirmation period for us to determine how much value this resistance line has. All right, so chances are we're going to see price hit it, maybe cross over and then pull back. It's testing the other side and then pull back. And we're watching and we're waiting, okay? Confirming that this line is going to offer some benefit to us if we get into this trade and price still wants to go against us, okay? We're hoping that this is maybe our safety net. That's why it's there. It's our safety net. So, on the open of this bar, we get a rock star that prints. This is where I'm shorting it, okay? 5 ticks or less from this resistance line, okay? So I'm going to short it right here. So what are some other options? I'm going to try to short it typically, personally, on the open of this bar if the bar opens and sits at this point for the first few seconds. I'm going to enter this trade. If the bar opens and jumps, I'm going to try to get filled up in here. If the bar opens and drops, chances are you just missed it, okay? If it opens and drops immediately, and it can do that, you just didn't get in on that setup, you missed it, no harm, no foul, you just wait for the next one, and we get plenty of them. Now, the freight train is something that often happens when there's still some buyers that believe this is a good time to buy, and they're still hanging around up in here. And they're all excited. You guys ever chase a trade before? You guys ever get into a trade way after you think you should have, but you didn't want to be left out? That's the freight train. That's these guys up here. They're still, I don't want to get left out. Look at this big push. I don't want to get left out. I'm going to buy. And they'll run the price. They'll still run the price up until suddenly there's no more of those people left up here. All right? So you may wait for those people for a few seconds. You may decide you're going to wait X number of seconds. And the worst thing that happens is if we do get some freight trading, you get a better fill. If it doesn't freight train on us and it just goes down, then you missed your opportunity. No big deal. There will be more. All right. Maybe you want to take trades that are more than 5 ticks away from this resistance. That's up to you. I personally don't, because my belief is that this trend, this upward trend, is going to continue. And inside every trend is a series of pullbacks. And my assumption is, my belief for the sake of safety, is that this is going to be a 5 to 10 tick pullback, and then price is going to continue. That's my working scenario. I never expect price to go more than 10 ticks. It very often does, but I don't expect it. So I trade as if I know it's only going to go, 8, 10 ticks, and then it's going to continue on its way. This keeps me safe. It keeps me from chasing trades, and it keeps me from taking trades way down here when I know my sweet spot is the first few ticks. All right? Maybe you'll require, this is something that you could do, saying, you know what, I've got to have a pullback alert. I've got to know that inside this bar, I have that churning price action. And you can use that as a qualifier. You can add this to your trade rules to say, you know what, I like the speed tick, I like the overbought, I like the resistance, but I need a little bit more confluence. So I'm going to wait for that pullback alert. All right, you can certainly add all of those, or a ricochet indicator, which we haven't talked about, but we do have in the trade room. Now, there's also a few more based on your personal risk tolerance. Let's say you could also decide to have X number of bars momentum. Say, I won't trade a 1 bar trade. Let's say all this happened, but just on this bar, we have resistance here, overbought, speed tick. You could just say, you know what, doesn't qualify for me. I must have at least 2 bars of momentum, or at least 3 bars of momentum. This is part of figuring out your risk tolerance levels after you learn the basics. All right. Remember, we talked about driving a car. We all drive a car a little bit differently than we were taught at driver's ed. Right? We've all developed our own style, our own level of comfort based on our own risk tolerance. And to be honest, after all this time, you're probably a much better driver than you were when you started. Even though they taught you all the safest ways of doing things, you're probably much better because, as you see, experience is probably better than the lessons that you learned in driver's ed. That got you started. All right? And then once you have experience, you start understanding things better, and you know how you can do it more comfortably. All right? So you got to say whether it must be overbought. See, we're showing this overbought, but for a Rockstar trade setup, it does not have to be overbought. Okay? You don't have to have this, but you may decide that you must have this, or you must have the pullback alert, or you must have the ricochet, or you must have all of them. It's all about your risk tolerance. And all that is increasing the level of confluence. You're increasing the amount of data that you need to give you the confidence that price is indeed going to pull back here. Okay? You can decide that you must be, maybe instead of, I like 5 ticks as my minimum, maybe you want only 3 ticks from resistance, or 2 ticks, or 7 ticks. That's totally up to you after you've learned the safest way of doing things. Okay? Maybe eventually you'll be placing market orders instead of limit orders. I recommend only limit orders until you've mastered this, until you've got the experience, because you can take slippage with a limit order. And if you've got a 5-tick target, suddenly that becomes a 4-tick or 3-tick or 2-tick target because of the amount of slippage that you took on a market order. All right? So you want to get really good at limit orders. And what's going to happen on some of your limit orders? You're going to get left behind. So what? Don't worry about it. Get good at the limit orders. Just as often, you'll place a limit order here and price will jump up. So you're going to get filled anyway. It's not that common to place a limit order, sit here, sit here, sit here, sit here, and then price takes off without you. Sure, it happens. But I'm going to say 25% of the time maybe. So yeah, you'll miss some by doing limit orders, but you've got a lot of work to do before you're ready to start turning this into a market order trading system. Okay? Maybe, like I said, waiting on the freight training. Maybe you just decide, and I've had a lot of people tell me, you know what? I started waiting 5, 10, 15 seconds before I enter this. Again, you will reduce the amount of times you get stopped out by the freight trading. You will also reduce the number of trades that go straight to target and you're still sitting there waiting. Okay? But a lot of people that can't stand this whole idea of this freight trading taking them out will prefer to wait a little while. Okay, that's totally up to you. That's not a stop limit order. You're talking about stop limit, Heinz. This is just a regular limit order, just a standard limit order. So you use minor support and resistance, which is like our high and low of the day. We use those in the trade room also. You may decide that you don't want to use minor support and resistance. You only want to use major. All right? So we just covered the Rockstar trade setup rules. Now, when we started trading the Rockstar trades, people started getting really excited about it. And everybody in the room got so excited, they started ignoring the support and resistance rule that we just talked about. You have to have a line of support and resistance. And that started driving me crazy for the first thing, because that rule was there for a reason. It's there for safety. But what it did do is it triggered, for me, a study. So I went, and when I do a study, it is an exhaustive study of hundreds and hundreds of trade setups. And I collect all of the data, and before I'll ever put a single dime on a trade, I have to know that that setup has an edge equal to or better than the edge that we have with the other setup. Okay? So it triggered a study that I did, and we started noticing that, yeah, we get a lot of these pullbacks, and they go straight to target. And how can we trade those with any level of confidence without having our safety net? So when I did the study, I noticed that we either had an overbought condition, a pullback alert, or both on the ones that went pretty much straight to target. Okay? So we created this, that one or both of these needed to be, in order to take a naked Rockstar trade, one or both of these needed to be on the bar with the speed tick. Okay? So we use that now as a trade qualifier. So we used to get, when we were just doing the Rockstar trades, we used to get 3 to 4 average setups a trading session. All right, and now I'm going to say we get, on an average day, of course, it could be anywhere from 0 to 20 setups on any given day. But on an average day, we'll get 8 to 10 setups. Okay? But it didn't affect our win-loss ratio, and that was critical. All right? So, here are the basic rules of the Rockstar trade that we just went over. Now we're going to apply these new rules to the naked Rockstar trade. So we're going to get rid of some stuff that is either relative to support or resistance, or was optional for a Rockstar trade. All right? We're going to get rid of those, and we're going to create a new indicator. We're going to add a new indicator as a little helper tool that we call the Naked Rockstar Zone, and we're going to talk about this in just a minute. That's this little shaded area right here. It actually has arrows on the side of it, but I put this in just on the slide. All right, so now we're going to talk about the basic rules of the Naked Rockstar, and you're going to need to pay attention the difference between the two, because it's probably going to come up on the quiz that we're going to have in a little while, okay? We still want to see a breakout of the channel. That is why this is here, this Naked Rockstar Zone. is to help us to see and understand when that breakout is happening and how far outside the breakout we are. Okay? That's the naked rock star zone. We'll talk about that in a minute. We still want to see our momentum bars. Okay? No change there. Now, it's required for a naked rockstar trade that this bar gets overbought or that we get the pullback alert, or both preferably. Again, this would be a great, for those of you that are just learning and you want to be very conservative, be a great rule to say, I will not trade any naked rock stars unless it has both of these, okay? Personally, I use one or the other. But that's me, and I've been doing this for a lot of years, okay? If I were you, I'd say, let's just do both of them and let's see how that goes. And over time, when you gain experience, let's do one or the other. Oops, hold on a second. Sorry about that. I guess that means time's up, right? Time's up. Margin call. I like that. That's funny. All right, we still need the speed tick because you cannot get a rock star without a speed tick. Now, let me back up just a hair. I know a lot of you are here to decide if you want to buy the Rockstar indicator. Because you say, well, if OBOS is in OBOS, that's overbought, oversold, that's this indicator, is inside the Rockstar, the speed tick is inside the Rockstar, and there are divergence indicators inside the Rockstar, why do I need these other indicators? Okay, you need them because if you're just waiting for the Rockstar to pop up, you're going to get left in the dust. These give you the heads up to be ready. Again, if you go back and you watch the Trade of the Day videos, I'll have a bar that looks like this, and I'll say, okay, under these conditions, if the next bar opens with a Rockstar, I'm going to short it. Okay? This also gives me time to shift my focus onto my trading dome and to watch. We usually have a countdown timer that's in this bottom corner. When it counts down to 3, 2, 1, and I'm waiting for the open of this bar, and my eyes go right to my dome and I enter that trade if the Rockstar prints. All right? So that's why you need these other indicators. Only gold rock stars. This is trade room gold, okay? If you decide you want to, you're inside the rock star indicator, you can turn them any color you want. Now, why is this gold? Why only gold? Because it's printing outside this zone. And I'm going to tell you that. I'm going to talk about that in a minute. We're only talking about basic rules for qualifying a naked Rockstar trade. If it's gold, then I'll trade it. All right, so some options. Again, must have a certain number of bars of momentum for naked rock stars. Maybe you're going to require more bars, less bars, up to you and your studies and your risk tolerance and your ability to practice. Okay, so say you can't practice as much as we recommend that you practice, which, by the way, we do have a program that teaches you how to practice this stuff and then provides you tools to practice with, okay? So we do have that. But let's say you don't have the ability to practice. You just want to wake up in the morning and trade and go to work, and that's it. That's all you want to do. If you're going to do that, and you're not going to practice, you're not going to really gain a whole lot of experience. And if you don't gain a whole lot of experience, then you need to probably become a more conservative trader. So you want to create a set of rules for yourself that are much more conservative than those people with more experience. Makes total sense, right? You're not going to learn how to drive a car by driving an Indianapolis 500 race car, right? You're going to probably learn in something small and then work your way up if you intend to ever drive a race car. If you don't, stick with the little, economy car or whatever. Maybe you're going to wait before placing your order. Same. You'll notice these trades are very much the same. All right. So, you see a zone. This is the actual image from the trade room. All right. So this is our naked rockstar zone, or we say NRS zone. The zone helps us understand when we're in a range and when it's a good time to expect exhaustion. If price is inside the zone, I will never take a naked rockstar setup. Ever. You will also notice that the rockstar is black. So there is a rockstar. It does not mean that the rockstars won't print. Okay? There are times where we get a speed tick, even though we're channeling, there are times when we get a speed tick on this bar and a rockstar on this bar, and it happens inside this channel. Okay? It does happen. This is why we're traders. We have to qualify trade setups based on the current conditions. Okay? So indicators only indicate conditions. Traders are the ones that decide if those indicators are sufficient to place a trade with a high degree of probability. So this rockstar does not qualify for a trade setup because it's inside the zone. Okay? If I had a rockstar on this bar, it would qualify outside the zone, assuming the other conditions are in place. Okay, so we're outside the zone. So this is a no trade zone for the naked rockstar. Please pay attention and understand this. You're probably going to see this again. So it tells us that we've broken out of the range, which means we have a push, which means that exhaustion is more likely. All right? So, does this setup qualify? Anybody? It does not. What if it was Obos, Gavin? Well, Graham, sorry, not Gavin. Graham. There you go. How about now? Does this trade qualify? Why not? Not naked enough, or is it naked at all? What's the name of this trade setup? Right here. Correct. What is this called? No, it's not called a no trade zone. It's called a naked Rockstar zone. So what does that make this? This is a Rockstar trade. We don't give a crap about the zone for a Rockstar trade. This is only used for naked Rockstar trades. This is a valid Rockstar trade setup. Scratch your head. Watch the videos back. After Connor will send this out, watch it back and you'll go, oh, I get it now. If it's got support or resistance, well, that's okay. So that's making the assumption of the other qualifiers, Lynn. Yep. I was just talking about that the Rockstars here, but yes, we're also making the assumption of the other qualifiers. So you see that outside the zone, we print no, Black Star is a no-go for a naked Rockstar. For a Rockstar trade, we don't care what color it is. All right? Because it's got our safety net behind it, support or resistance. All right, so if it prints outside our naked Rockstar zone, we have it change colors. We do that because we have to make very fast decisions. And sometimes if price opens somewhere around in here, we may not know or be able to see very easily whether it's inside or outside the zone. So we have it change colors. This actually happened after I created this zone here. We still had people that were struggling with it, whether it's inside, outside, on the zone, or whatever. So I have inside the Rockstar now is a condition that says if it prints inside the zone, print one color. If it prints outside the zone, print another color. Okay? So this came up later. All right, we also have another nifty little tool. As I said, a lot of our decisions have to be made very quickly. We don't always have time. Remember I said if a bar opens 5 ticks or less from a line of support or resistance, that we take the trade, that it qualifies. We don't have time always to count ticks. Okay? 1, 2, 3, 4, 5. Okay, and I missed it. So we created this little helper tool. This isn't really indicating any certain conditions. This is just a little helper tool to help us easily visualize what the open of the bar was. If we put on a buy order, where was our target? If we put on a sell order, where's our target? If we put on a buy order, where's our stop? And our sell order stop. Okay? This, by the way, is adjustable inside the indicator. Okay? So if you decide to use this for, you want to create a 7 target and a 10 stop or something, you can adjust this inside the indicator as well as the colors. Okay? And you can adjust whether you just have lines, whether you have the little arrow on the tip or just the arrow. All of that is user definable. Okay? I don't trade Forex, Phil, but I would start out with what we do. I would have to analyze Forex over a longer period of time, but I would suggest start out with a 5 target and a 7 stop, and then adjust it over time, okay? All right. So we're going to talk about the speed tick trade setup, and I want you guys to understand that we're talking about these setups, and we have been for this is the 3rd day now, and we're kind of doing it to you. No, we're not kind of doing it to you. We are absolutely doing this in reverse order that I developed these setups and traded them. Okay? The reason we're doing that is because I wanted to show you the beginning, the Rockstar trade setup, that is the most qualified, highest probability setup that we have, that I have been trading for a long time, but I worked my way up to that by finding more and more confluent information to suggest that that price is going to move the way that I want or expect it to. Okay? So the first setup, or the highest probability setup, is the Rockstar and then the Naked Rockstar. So I taught you those first. Now we're going to talk about the speed tick trade setup. The speed tick trade setup was what I traded for a long time before I added in divergence. Okay? So that was a game changer for us. I was still doing very well with the speed tick, but I'm always looking for more information that the market is providing to us and how to exploit that information to get better at what I do. Okay? I'm always looking. So over time, we came up with the Rockstar, Naked Rockstar. Prior to that, it was just the speed tick setup. Now, there are people in the trade room that only trade the Rockstar or Rockstar and Naked Rockstar and don't trade the speed tick setup because the speed tick setup doesn't offer as much confluence, but still I've been trading it since the beginning, and this is what I'm very comfortable with, and I still have a high win rate on the speed tick setup. So we recommend before you start trading the speed tick setup, get really good at the Rockstars, and then get really good at the Naked Rockstars, and then get really good at the speed ticks after that. Okay? If you feel like that it's just too much to learn, do it in steps. Wait until you get very proficient, should I say master the other setups before you move into this one. And this one, you're going to see the same thing. Because we've been doing this as a backwards progression, you're going to see we still have the same qualifying factors. We're still looking for the breakout of the channel. We're still looking for that strong push into a line of support or resistance. Okay? We're looking for the momentum bars to go from dark to light. Okay? Now on this particular example, we have a single bar push. There is a rule in the trade room for many traders that says, I will not trade a single bar push no matter what. So for a lot of traders in the trade room, even though this bar got overbought, had a speed tick, had momentum, this would not be a valid trade setup because it was a one bar breakout. Okay? Not enough potential exhaustion, so they wait. All right? This one here, you notice we have momentum. It's getting lighter. It's getting even lighter. Slams into this line of resistance. Next bar opens under that line of resistance. Oh, this bar, both these, you must, this is not optional for the way I trade the speed ticks, you must be overbought or oversold. Okay? I want to see a really strong move into this line of support or resistance. You guys see this in the trade room all the time. Price goes and it moves, and it really picks up speed. We get the speed tick and bam-o, it slams right into that line. Might even cross the line, come back, and then open below. This is qualifying that line for us, saying, wow, look how far price moved, and then it hit a brick wall. All right, and we're going to wait for the open of the next bar to qualify this line of resistance, saying that it has value. This bar opens, that's where I put my trade on. All right, with a small white speed tick. Okay, remember, this is where we feel like there is a manipulation happening. Now we have, because the way these print, this prints as soon as that condition exists. So it's like a speedometer. So we hit 100 miles an hour and we print immediately. We don't wait for the open of the bar, of the next bar. As soon as we hit 100 miles an hour, we print. Now what if we hit 200 miles an hour? We're going to print, we're going to now replace the little white one with a, now this is not as big as it is in the trade room. I made these bigger so you could see them well, easy. They're really not this big when we trade. This is a medium blue speed tick. Okay, so we're saying now, wow, there may be a couple of more speed tick manipulations going on here, and they may be fighting each other. Some traders will say, I ain't trading that. There's too much going on. There's too much volatility. It's outside of my ability to be comfortable with what's likely to happen next. For me, which is what the trade room rules are based on, I will trade this, but my antenna's up. Okay, I'm paying much more close attention to what's going on and the type of price action. Okay, if I look and all of my domes are like jumping like crazy, I'm probably going to back away because it looks like something else may be causing this, like an unscheduled news event. When we do get that, we will typically go to the next level, which may be 300 miles an hour or faster. All right? So the medium blue will be 200 to 299 miles an hour. 300 miles an hour, I'm like, nope, I'm out. Something else is pushing this market that I don't have any ability to understand what's likely to happen next. Okay? It's going so fast, it's now outside my comfort zone. I'm not trading it. All right? Those are our speed ticks. All right, so the bar opens 5 ticks or less below this line of resistance. That's where my trade is. So options based on your risk tolerance. Again, must have a certain number of momentum bars. You could have ruled this one out and traded this one based on momentum bars. Must have a pullback alert or a ricochet on the speed tick bar. Must have X ticks or less from resistance. I use 5. You might want to use 3 or 2. You might start placing market orders instead of limit orders, or you may want to start waiting to place your trade. Okay? Now, we also have a rule that says that you can wait for the next bar. So, for example, remember I said that we're waiting for the close of this bar, the open of this bar to make a decision. Our decision is actually made on the open of this bar. We're waiting because we're confirming that this resistance has value. And we do that because if we get into this trade and price tries to go against us, we're hoping that the traders trading now see this and they don't want to cross it because there's value in this line for them. All right? So we're hoping for that. Now, if this bar opens and it just kind of doesn't really do much, kind of drops a little bit, comes back, goes across, comes back, and basically the next bar opens in the same area, you could wait and take the next bar. All right? That's just called a next bar speed tick. All right? And a lot of people do this. There will be times where, let's say, now this bar opened under this resistance, right? So that qualified it. What if it opened above? Well, that says it does not qualify. What if the next bar opened below? Yep, it qualifies. So I could take it then. All right, so I'm going to pay attention to that. I hope you guys are writing down any questions you might have. Which one is a valid speed tick trade setup? Well, you don't know that that's a single bar push. I didn't even show it in the picture, Sam. And to be honest, you can actually see one of the bars down here, and this was not a single bar push. But that only qualifies it for some people, not everybody. This could absolutely qualify this bar. What I suggested was that you could decide, depending on your risk tolerance, whether a single bar push qualifies for you. I personally trade single bar pushes. I don't recommend it to people learning. Okay? So, let's look at this. There's only one that qualifies. So what was the rule of the speed tick trade? It has to open below resistance. Right? Is this below resistance? Yeah, 5 ticks or less. Below resistance. Is this below resistance? Nope. Is this below resistance? Nope. Second bar is, but it's more than 5 ticks. Gavin, I would never trade second bar here. Too far. If it opened up here, I would. Depending on what this bar did. But if I opened up here, it would qualify as a second bar. This one qualifies. We open 5 ticks or less from the resistance. I'm going to sell short right here. So what if I sold it here and the next bar opened up here? This is a trade management rule we haven't talked about yet. If you get into a trade, there you go. If you get into a trade and the conditions change to the point where, now you're in the trade and you're managing this trade. Okay, so you shorted it right here. So that bar popped up and then opened on the other side of this resistance. Now, would you have gotten into this trade if this bar had opened up here? Nope. So if this bar opens up here, the conditions that got you into the trade change such that you would have never gotten into that trade. So what are you going to do? What I'm going to do, remember, I entered this trade with a 5-tick target and a 7-tick stop. The very first thing I'm going to do is click on my stop and start shortening it. Okay? I'm not going to just bail out of the trade. I'm going to be paying very close attention, and I'm going to be counting on all of the practice and experience I've had with managing trades, and I'm going to start shortening that stop. So instead of sitting there waiting for it to hit my +5 or -7, well, I no longer have a safety net here in the event that price wants to continue on. So I'm going to start shortening my stop, and I'm going to shorten it down to 6 ticks, then I'm going to be at 5 ticks, then I'm going to be at 4 ticks, Depending on how long price hangs around on the other side of this line, I may drop my stop onto the current price where it will take me out at a -4, a -3, -2, whatever. As I'm managing the trade, it's also likely that price will start to drop on its own. This is why I don't just bail out of the trade. I'm still giving it an opportunity to go in my favor. I'm not giving it as much of an opportunity to go against me because my safety net's no longer there. Okay? So I will, on many occasions in the trade room, instead of always, I'm a trader and I don't just sit on my hands. If the conditions that got me into the trade change, I'm going to do what I have to do to get out of that trade. And so I'm not going to just wait for it to either hit my target or my stop. The conditions change, I'm going to change. And I'm going to shorten my stop and try to get out of that with a smaller stop. Okay? Well, that's also why we have the zone here, Gord. See, this is a two tick. This is a tick. Then on each side is 2 ticks. A lot of people will use the zone instead of the line for using it for support and resistance. So you could certainly do that. Here, okay, Casey, pay attention. You might see that come up too. I'm not saying that I say that ever, but it's funny. I have a really funny story about that. I'll tell you someday, or maybe I'll tell you during the Q&A, because this video is actually going to be used as part of our training video series. So the conditions have changed. I would never have gotten into this trade under those conditions, and I'm going to start shortening my stop. Okay? So all of our trades are entered on with a 5-tick target and a 7-tick stop. All right, that's just a bracket order. You set it up in your ATM. It's really simple. Do not move the target during the trade. I never move my target during the trade. All right, I'm always going to manage my trade with my stop. I never hit the exit button on a trade or the close button. All right, I'm always going to exit a trade by managing my stop. If you hit the close button, you're going to be marketing out of the trade. You could take more slippage than you're counting on. All right, so management is with the stop only. And I only shorten my stops, never move them further away. If the conditions that got me into the trade change such that I would not have entered that trade under those conditions, I'm going to manage my stop. All right, and there's some other options. You can increase and decrease your stops and targets if you want to. Again, I'm going to tell you to start with what I've identified as my sweet spot, what I like. But you need to, this is how you have confidence in a trading system. You do the studies that I've done. For me and my risk tolerance levels and my level of experience, I like the 5 and 7. You may decide you want 3 and 5, or 5 and 5, or 7 and 5, or 5 and 7. I don't know. If you do the study, you collect the data, you're going to build confidence in this system. Okay? You don't have to try buy confidence from me or gain confidence from the indicators. You will develop your own level of confidence. And if you don't have a high degree of confidence, you should not be trading, at least with real money. You can build confidence by sim trading and by practicing. You actually earn confidence. I can't sell it to you. Okay? You might want to scale in or scale out of trades. A lot of traders like to do this and have an ATM set up that if it hits your target and doesn't fill, your stop immediately jumps to break even or break even plus one. Okay? A lot of people like to do that. All right, we've gone off over a lot of stuff. Here comes the fun stuff. Everybody ready? You got 5 minutes. We're gonna take a quiz. Now, don't forget to scroll down. Okay. On the first day we did this, people only answered the questions that were on the screen. There is a scroll bar on the right hand side. Keep scrolling down. I believe there's a total of 8 questions. All right. Have fun. All right, halfway there. Can't take too much time to think. One minute left. Oh, it was just part of the last question, Casey. That's the only reason it was funny that you asked. I'll tell you that story during the Q&A, which is coming up here in just a minute. All right. All done. Pencils down. Wow, that was a hard test. Do you guys think that was hard? So here's the thing about that. You probably needed more time, maybe. I threw some curveballs at you. I did a lot of this on purpose, and I gave you, what I thought was a reasonable amount of time for making making quick decisions. Now, had you heard this information over and over and over again, first of all, you guys would have all aced it, and you would have been able to go through these questions really quickly, because the information was second nature to you. Okay, it was very simple. The problem is that you guys struggled, a lot of you struggled, because you don't have a lot of experience or skill with these questions, okay? Or, haven't done it a lot and are relatively new. But over time, this will become second nature to you, these types of things. All of this stuff that I asked are things that you have to know to make very quick trading decisions. Our edge has to be exploited quickly. But the other side of that is it's an extremely high probability edge, right? Which also makes it so that we don't have to manage our emotions as much. We don't have to force trades. We have a higher level of confidence. There's a big plus side, and all we have to do to take advantage of the big plus side is to understand what it is that we're trying to do and do it very quickly. And do it over and over and over again. All right, so let's ask. The Naked Rockstar Zone. 16% of you said is a zone where only Naked Rockstar trades are taken. 27% said is a zone where no Rockstar trades are taken. You didn't read the question. You want to reread that answer to that question? Is a zone where no Rockstar trades are taken. What is the indicator called? Naked Rockstar Zone. Remember I said it is only used for naked Rockstar trades. You can take a Rockstar trade inside that zone, right? So the answer, only 20%, 22% of it you got it right, is none of these. None of these are the right answer. So I immediately threw you off balance. All right, a gold rock star prints only outside the naked rock star zone. Most of you got that right. You got right. Most of you got right. The open target stop, OTS. Struggled with this one. A naked rock star trade setup must have in all circumstances. Let's read the circumstances. Major support or resistance. Well, we already know if it's naked, it doesn't have support or resistance. That's what makes it naked. Nobody answered minor. Good. A pullback alert is optional. Overbought, oversold is optional. A white millimeter indicator bar, not necessary, optional. So the correct answer is none of these. Notice the capital must have in all circumstances in order to take a naked rock star trade. All right, let's look at the next one. For a speed tick trade setup, the first thing that must happen to qualify it as a good setup, break out of the range. That's the very first thing. That was the very first thing in every single trade setup we have. Sure, we're going to later hit support and resistance. We have an optional of having several momentum bars. That's optional. And the bar opening 5 ticks or less is what happens as you get into the trade. We're still at a point, the question is asking about qualifying it, okay? Our qualifying is step by step by step. This is what I tried to show you. Step 1, step 2, step 3, step 4, okay? Step 1, break out of a range. Okay, only 22% of you got that one right. All right, you guys all got the 5-tick target. The only rule that should never be tuned based on a trader's risk tolerance is moving your stop further away from your entry. All of the others are optional. and you can do that in trading for sure, Gord, right? You can talk yourself right out of a trade that you should have been in by being too thorough. All right, and most of you got the last question correct. All right. Can you guys see my desktop now? I've screwed this up 2 days in a row. Yay. Okay, so we're going to have a question and answer period, but Connor insists that I tell you guys about the specials that we're having. We've got a number of different packages that he's got a special price on. The academic and masterminds are great ways to get started. They're not going to provide you with everything that we offer. If you need to start a little bit slower and kind of work your way into it, that's fine. That's why we offer some of these other packages. By and large, most of our traders that have been with us any period of time are Einstein members, or what we used to call VIP. It's the exact same thing. We just renamed it. So what do you get for the Einstein? Well, you get every indicator that we have in our trade room. We get every future indicator that we ever develop. You get unlimited trade room access forever. You get our fast forward training program. You get our weekly mentoring that we do. It's a group session where I call the aha sessions. Some of the ahas that I had as I was turning my trading around from being a struggling trader to actually turning it into something I could, generate an income from. You Einstein get priority support no matter how many support requests we have, the Einsteins always get answered first. Um, our essential add-on suite for NinjaTrader 8 is a whole bunch of tools that we have to make NinjaTrader 8 easier and more fun to use. We also have our new program that I'm going to show you here in just a minute, called our Trader RX 2.0. I started talking about this a little bit before the meeting, and I'm going to show you a quick sneak peek of it. It's not actually functioning right now, but I have something that you can look at so you'll understand better. And if you want to have a meeting with me to discuss what it is that you've been doing, what you feel like your weaknesses are, where you've been struggling, where you feel like you need the most help, I'm happy to talk with any of our Einstein members whenever they need something. So that's really the biggest bang for the buck is the Einstein. Um, of course, some of the other programs are available for a price for the other people that have our other packages, but typically people are just going to upgrade to Einstein so they get it all because you're not going to be saving a whole lot by piecemealing it. Yeah, those mentoring sessions are recorded and made available to our Einstein members. Okay, you guys want to take a bathroom break? We've been at this for an hour and a half. Do you want to take a bathroom break before we go any further? I vote yes. We all started drinking coffee this morning. So let's take a 3-minute break. I'm going to show you just a real quick sneak peek of our Trader RX 2.0 and then question and answer, Sam. Yep, so we'll take a bio break. So let's make it really quick. Let's make it like 2 or 3 minutes, and then we'll come back and wrap it all up. Okay. All right, we'll just keep waiting here, just a couple seconds, waiting for everybody to come on back. Um, you're not talking about the ATM strategy add-on. You're talking about adding on the static Superdome. Gavin, are you still here? Maybe you took a break. I'll wait. Yeah, so Tom, those are relative strength numbers. One trade setup that we did not discuss, and I'm not even sure I'm going to teach it anymore because it's a bit uh, it takes a lot more practice and experience. It's the very first trade setup that I ever traded, pullback trade setup that I ever traded, and it's called an FT, or a first touch. So a first touch, hold on a second. I still trade first touch trades, and I trade them in the room, and some traders do trade them. I don't say I recommend them unless you've practiced a lot. I'm going to show you one here in a second. Oh man, it's not letting me go up there. Uh, that's a weird thing with this new Corel draw. All right, I'll just do it this way. All right. So a lot of the same parameters in an FT trade setup that are in the other trades. But what the very first thing that I noticed when I was working on these pullback trades was how price reacted to a line of resistance that had not been touched or crossed in a very long time. So how can I, if I'm only looking at this many bars on a chart, how can I know what a very long time is? That's what that is. That number will tell me how long it's been in minutes since price hit that line prior to this bar. So I've figured out that if price had been 2 hours or more, or 120 minutes or more, there's a very good probability that price is going to hit that line and at least pull back a bit. That was my very first pullback trade setup, and I practiced it, got really good at it, and started trading it. And that's what led to eventually the study and development of the speed tick, which led to the pullback alert, which led to the ricochet, which led to all kinds of other stuff. Okay, this is the very first FT, or first touch. FT stands for first touch. So it's the first time it's touched it in the last couple of hours. Price is probably going to react to it. So that's what that number is. If you're not staring at this line when price hits it, then whatever number was here just moves to the right, so you can reference that number. That's all that is. Gavin, are you still here? So you said the ATM option, or the add-on. The ATM is in NinjaTrader. I think you're talking about the static Superdome, right? Yeah, I wouldn't trade it without the static Superdome and the ATM. I wouldn't. All right, any other questions? All you gotta do is request it. They'll give it to you. You just have to request that they enable it for you. Well, here's the thing. I call it relative strength, Sam, because the longer it's been, the more likely it is price is going to react to it. So it's interchangeable. Not yet, Tom, but that seems to be a question that you and another couple of people keep asking me. So I'm not going to show how I use a trading dome, because what's going to happen is you're going to try to do what I do, and then you're going to go broke because you don't have the experience that I have. That's like, I used this analogy to somebody the other day in a support ticket that asked me the same question. And knowing you the way I know you, Tom, that's kind of like you coming up to your golf instructor and saying, hey, I want to learn how to slice the ball around that tree and backspin it and stop it next to the hole. Can you show me how to do that? And the instructor goes, you don't even know how to hold a golf club yet, right? Why would you want to know how to do that if you don't even know how to hold a golf club? So I get a lot of people asking me to show them what I do, and it would absolutely make no sense to them, and they couldn't do it. I've actually had people offer to pay to sit next to me. And as much as I'd like to take their money, it's not going to help you. You need to start out with the basics and work your way up to it. And if you ever get to a point where you're trading too many contracts and you can't get filled, I'll teach you what I do. Well, I would have to know. There is no average, Rose, because everybody's coming at this from a different angle. The average amount of time for people that get good enough to trade this system is dramatically reduced relative to how much time they have to work at it and practice and do the hard work that's involved in becoming good at it, just like any other skill. So again, that's like saying, if I go buy some golf clubs today, how much time does it usually take for somebody like me to be able to become a professional golfer? That's a very difficult question to answer, isn't it? There's an awful lot of things that are involved in that are unknowns. I don't know how hard you're going to work on it. I don't know how hard anybody's going to work on it. We provide the tools. Well, that's essentially what the pullback alert does, Casey. It doesn't tell us how many, because I don't care how many. What I care about is the way that the orders are coming into the candle. I don't care how many, because that's a way to introduce shades of gray. I want to know yes or no answers. And when I have a yes or no answer, that's when I print an indicator. So the indicator only prints when I have a particular type of volume coming into a candle relative to what the buyers and sellers are doing. If I have buyers, do I want to know if there's a bunch of sellers waiting when the buyers get to a certain point? I could, but there are too many games being played in the level 2 information. that I found that almost impossible to make really good trade decisions with. So I don't look at the level 2 stuff, the resting orders. Yeah, that's an ATM. Yeah. Automated Trade Management, ATM. So like when I put on an order and it gets filled, I automatically have a stop and target put on. So it's an automatic or automated trade management. Can you do the RX before question? Oh, you mean now? Oh, yeah, sure. Okay, so here's how this is going to work. You are going to be teamed up with what we're going to call your accountability buddy, who's also going to be another trader. We're going to do our best to team up teams that we think will be good for each other. All right, and that may be somebody who has a lot of experience helping somebody who has very little experience. It may be people that are basically the same amount of experience. Okay, it really depends on what's needed, and then we're going to switch those teams around. Okay, so we have created like I mentioned, this is not functional at this point. It's somewhat functional. But this is an online type of a program. Okay, so everything that you do will be online. So, for example, you're going to log in, and this will be your interface. You see where it says Hello Tony. So this is my interface. I'm going to, every time I take a trade, I'm going to fill out this log. Okay? And then I'm going to say whether I reached my daily target. Now, each exercise in the program, there are many exercises, and each exercise has a goal before you can move on to the next exercise. So the goal will be X number of days that you ended the day as a winner or having hit your daily target. So that's what this question is down here. Did this trade cause you to reach your daily target? Yes, no, or you hit your daily loss limit. Okay, so for those of you that know how I trade for a +3 net winning trades per day or -3 net losing trades for the day, and that's when I stop trading live and I just trade in sim for the rest of the day. So depending on what program you're in, which exercise will determine whether you hit your limit for that day. So you enter that, then you're going to enter the rest of this information here. After you enter that, it's going to show up on your log summary. Oh, I got to log back in again. All right, so after you enter all of this information, you can choose to answer it later, this stuff, because maybe you do it while you're trading. Oh yes, Graham, for absolutely sure. In fact, it's intended for a lot of practice trades. All right, so you can choose to answer these questions later because you're busy. You can add a picture to it. You can also choose, and here's where we're going to give you the option to choose not to show it to your buddy, but we're also going to give you a, hey, you might want to think twice about this because we really don't want to be hiding things from each other. All right, so then we're going to go to our log summary, and these are the summary of the trades that we entered. You notice I said, you could click to enter the information. You can do that and go here, and you can actually add that information that you did, and you can do it later. So you have the log summary. You can certainly search by your winners and your losers or partial losers, your instruments. You can search for all of this information. I think I did one where I added you can add an image. The image shows up down here. Now, you'll notice that when I went into this, it says this trade is not reviewed yet. That means that your buddy has not looked at your trade yet and given you feedback on your trade. What he thinks you did right, what he thinks you did wrong, questions he might have for you, and your explanation back to him why that was a good trade, or where in your trade plan the rules for that trade are. Okay? Or her. And you can do that communications here. This is, you see, Connor is my buddy, right? He's set up as my buddy for this example. So this is a chat area where you can chat together, or you can leave messages for each other. You have the log summary here of everything. This is actually where the magic happens. This tells you about your project and the exercise. This tab doesn't even work yet. This tells you how you're doing, how far you have to go, where your struggles are. All of that is inside the progress tab that we don't have ready yet. But this is what you're going to work on with your accountability buddy. And that's why it's very important that you're very honest so that you can get good and honest feedback. Okay? So that's just a sneak peek of what we're looking on. We're still a few weeks away from getting that done. Yeah, let me see. Did I miss anything yet? As long as I log my practice trades and stuff. No, there will not be any way to import Excel. Everything is designed to be done inside this program. Oh, you're welcome, Rose. Yeah, the fast forward program. Okay, so the whole point of all of this, what we do, is to build your level of skill. And the higher your level of skill and experience, the more confident you become as a trader. And the more confident you become, the more comfortable and consistent you become. Right? So the whole thing is about knowing how to practice your trading. Now, I don't mean going into our trade room and sim trading for a few hours. All right? That's not practice. That's simulating game time. That's simulating how you're going to trade when you're actually trading with live money. Now, yes, it does help to develop some experience, but the fast forward program gives you the ability to develop that experience, but doing it exponentially shorter amount of time by showing you the right things to practice, how to practice, and giving you tools to practice with. For example, using the trade room videos. We video our trade room every day. For those people that can't be in our trade room, they miss out on the opportunity to hear what happened in the trade room, to see what happened in the trade room. So we provide that for them so that later in the day, this is a way of practicing. They can play that video. They could set up their playback. They could set up their domes for those instruments that we trade. They can hit play on that at the same time they hit play on the video, and they can trade right along with us in the trade room. That's a way of doing it. Not the most efficient way, but that is a way that some people like to do it. The most efficient way to do it is to identify the trade setups that happened that day and then go directly to those times and trade them on your dome and you have your chart set up. And you can go backwards and forwards. You can trade it over and over and again. So if I trade 5 setups in a day in the trade room, you may be able to in your practice session trade 25 setups in an hour. And you can work on that practice. You can work on identifying the setups. And we have a whole log that we keep of potential trade setups that happen during a trading session. We have a lot of other tools to help you understand. See, I didn't practice my trading when I was struggling because, to be honest, I didn't know how to practice. It never occurred to me to practice. To me, working at my trading meant staring at static charts and throwing on more indicators and going, well, that doesn't look good. I don't know what that does. I'm going to try this indicator. I don't know what that does. Well, that looks pretty cool. I'm going to keep it on there. I think I'll just go read some more forums and watch some YouTube videos and download some free indicators. And I'll just keep. To me, that was working at my trading for 7 years. That didn't really work out too well. When I finally realized the only way to get good at any skill is by repetition, by working at that Bruce Lee thing. I fear not the man that's practiced 10,000 kicks. I fear the man that's practiced one kick 10,000 times. And that's what it takes. We don't have to know a whole lot. I mean, it may seem like a lot, but trust me, once you've worked at it, this stuff becomes boom, 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 second nature. You only have to think about it. We don't have to know a whole lot. We don't have to do a whole lot. We don't have to expose our money to the markets a whole lot. We're in and out of trades quickly. We do something very small. We're the best in the world at it, and we do it over and over and over again. Yeah, you can, Casey. Yep. Yeah, you can, Graham. Absolutely. I'll show you. I'm going to create some videos for that for part of the mentoring program, the accountability buddy program. We're going to tie in some of the fast forward stuff in it. You can do it. I'm not saying I recommend it, but you can do it. Yeah, I see it, Connor. I got it. Any other questions? Did I miss anything? Casey, was that a good explanation for you? Yeah, I know that playback in NinjaTrader 8 sucks. But we're working on, you see this essential add-on suite right here that the Einsteins get for free? I am currently working with a developer. We're trying to create our own version of NinjaTrader's playback that actually works. And that'll be included in this essential add-on suite. So everybody that has this add-on suite will get it for free. We're actually, he texted me as I was talking here today. I noticed he had a little pop-up in the corner of the window here. He texted me about that exact thing that we're working on. Yeah, you can do it, but there's an easy... I don't know. I think I should put that thing on eBay because I'm getting a lot of people requesting that. For those of you that don't know, Sunday before last, Connor and I and my wife and daughter were all on Shark Tank. Season 10, episode 14. We're the last group in the tank. For those of you that want to watch it, Robert, we trade the 1 minute because were you here earlier? Were you here earlier on Wednesday or Thursday? I went over why the 1 minute time frame. It's the best information we have about what's likely to happen next in the chart is based on what is happening right now. Right? We have the strongest probability of understanding what's about to happen based on what's happening right now. Connor might have one. I think Connor posted one somewhere. Not for you guys, but on his page or something. Do you have a link? Not sure if you guys will be able to watch it, though. I know that the internet has ways of figuring out that you third world country people, Graham, if you're not in the U.S., you're just third world. Any other questions? All right, so let's make sure you guys understand the value of the Einstein. Once you're an Einstein, there's really nothing else to buy ever. We never will, if you want to, add more workstations, or something like that, sure, there's an extra charge. But there are very few things that we offer that aren't included in the Einstein program. Anything that has to do with, we made some stuff compliant with Shark Indicators, Bloodhound, and so if you're going to use Bloodhound and you want to use some templates or something, there's an upcharge for that kind of stuff, but that's very specialized and not something that we really do in the trade room. So by and large, almost everything that we ever develop and ever come up with, like this new program, is going to be free for Einsteins. So we figure you're all in, we're all in with you, okay? We're not going to nickel and dime you to death. Those of you that aren't in Einstein, but you've chosen one of the other packages, you can bet we're going to nickel and dime you to death. Oh, question at 12:41. I'm sorry, I thought you were talking about that other thing we were talking about. Why not use a longer target and manage your stop and get as much out of every trade as possible? Yeah, tried that. Tried that, Tom. It's interesting how much work is involved in doing that for how little benefit. And I can tell you that from experience. And I can tell you that a lot of our other traders have tried it. What happens is that you're managing that and you're trying to stretch it out, but it ends up coming back and biting you in the ass, and you end up not getting the pullback that you have expected. If you have had good results, I would never stop you from doing it, okay? I would never tell you not to do it. What I have done is I did a 6-month study of that exact thing. And after 6 months, my results were not appreciably different than they had been the previous 6 months. Okay? Not only that, you can never lose money by putting money in the bank. Yeah, maybe. So I decided, rather than, and if you're managing a trade, Tom, if you're in the middle of managing a trade, you're going to miss the next trade. That could be a better opportunity. So not only that, but you're also, the longer you're going to trade, the more you're at the mercy of these, whatever is going on in the market. So I made a very conscious decision that I want to get in, get my ticks, put it in the bank, get out, and wait for the next setup. And that type of trading has appealed to me. If you feel like you want to manage every trade to maximize a potential target, you can. I tried. Others have also reported to me that they have tried and did not have the results that they were expecting. I trade from 9 a.m. until noon. The trade room opens from 9 a.m. Is open from 9 a.m. to noon. I come on the microphone. I don't get a lot of trades between 9 and 9:30, although I did last week and the week before. But I don't get a lot of trades usually between 9 and 9:30. So I come on the microphone after the open of the equities. So that's it. That's all I trade is during the busier time. Bloodhound is something that you can automate trade signals with, and it's a cool product. And you can even take that automation and send it to an order management system that they have, which is also cool. There are some traders that want to do that. It requires a good bit of practice and skill, and I mean, it's an awesome program. They have just released the version for NinjaTrader 8, though, and so have not been quick to tune our stuff or to make our stuff Bloodhound compliant. We're actually in the process of that now. So you'll learn more about that later, Christopher. I don't think at this stage it's something that you'd be, that would fit with where you are right now. But, go ahead and it's called Shark Indicators is the manufacturer and Bloodhound is the product. Just Google it and go to their website and you'll learn more about it. Same, Graham, same thing. I've found that the sweet spot that I always talk about is not a random sweet spot. Okay? That's a sweet spot that I have identified over a long period of time, and the expectation is that we have, depending on your entry, and where you enter, we're going to have from the highest point of the bar with the speed tick on it, our sweet spot is about 10 ticks. Okay? Beyond that, it gets more speculative and more and more and more because the expectation is that the trend is going to continue, which is why there are so many trend traders. Well, I think it is too. You would have to be putting on these trailers, assuming that it's not just a sweet spot pullback, but it's an actual reversal. No, Casey, they come to you all calibrated for what we do in the trade room. If you wanted to change any of them, certainly you can. There are lots of parameters in the indicators to change to your own liking. You can even change a lot of them to be more or less sensitive. But they come to you the way we use them in the trade room. Connor, did you put oh yeah. So if you want more information about some of these indicators and stuff, go to the current specials page that Connor posted there. Any other questions? I know we covered a lot. The tests that you guys took these last 3 days are going to be part of, not these exact tests necessarily, but they are going to be part of the Accountability Buddy program. You're going to have to not only hit certain goals, but prove that you have a certain level of understanding of the trades and trade setups before you move forward. You're not even going to be allowed to participate in the program until you've proven a certain level of competency. Again, remembering that you're also helping somebody else. No matter what your level of experience is, you can still help other people. Being taught is very helpful to those that are teaching. Okay? I learned, and this is why we're doing it this way. When I started the original mentoring program, I learned that I became such a better trader by teaching it to other people. I learned an awful lot about what the trader I had become because I started thinking back on the things that I had learned along the way, which had I not had that opportunity for introspection, I don't think I would have ever been as good a trader as I am now, because I thought back on it, and then I started teaching it to people. That's when it started making more sense to me. So that's why I want this program. I want you guys to be in this program, not just to learn from, but to teach too. All right? It's an exceptionally powerful way to become more skillful and more confident at anything. All right, well, we've been at this for 2 hours, and I think I've hit my limit. Unless you guys have more questions, I think we'll call it a day here, and we'll get you guys all set up. We had a couple orders already come through from the group today, so I want to thank you and welcome you to the team here, to the family. We'll be getting you guys set up. Probably can't do anything else this weekend. I don't have any appointment time this weekend, but I do first thing Monday after the trade room. Upgrade questions right there. support@theintentionaltrader.com. It goes straight to Connor. He's your guy. All right. So for those two of you, I think just two, that have signed up, I'll be scheduling things for Monday and anytime during the week. So I'm pretty clear so far. So I'll send you emails and we'll get things squared away. Everybody else, go hit the specials page. Let's get signed up, and then we'll get you started next week. You guys all have a great weekend, and we'll see you next week. Bye now.